Hello and welcome. In this video, we will explore fundamental accounting concepts and see how they come to life in ERPNext. Our journey covers the accounting equation, the basics of assets, liabilities, and owner's equity, and how they culminate in the balance sheet. We will keep things clear, no prior accounting or ERPNext experience needed. You will not only understand the concepts but also apply them practically in ERPNext. Ready? Let's dive in. The accounting equation is the bedrock of financial accounting. Assets equals liabilities plus owner's equity. Everything a company owns is balanced by who funded it, creditors or owners. A proper balance sheet must always balance. This is true by definition. The left side lists resources, the right side shows claims. That equal sign forces us to ask, whenever assets change, did cash come from borrowing, owner investment, or profits? Let's bring this to life in ERPNext with an owner investment of $5,000. From the ERPNext home screen, open the accounting module and choose Journal Entry. Create a new entry. Set the posting date to today and add a short remark like owner investment to make the ledger easy to read later. In the accounts table, add a line for the money coming in. Select your cash or bank account, for example, cash in hand or the specific bank ledger under current assets, and type 5,000 in the debit column. Add a second line for the source of funds. Choose your equity ledger, often called owner's capital, share capital, or paid in capital under equity, and enter 5,000 in the credit column. Glance at the difference indicator at the bottom. ERPNext shows the entry is balanced when the difference is 0. If everything matches, save the document and submit it. You have just increased cash by 5,000 and increased equity by 5,000, keeping the equation perfectly balanced. If your chart uses different labels, pick the equivalents, a specific bank account on the asset side and equity or subscribed capital on the equity side. Assets are resources owned or controlled that provide probable future benefits, cash, receivables, inventory, equipment, and more. Current assets, cash, receivables, inventory, prepaids are expected to convert to cash or be used within a year. Long-term assets, property, equipment, long-term investments, intangibles last longer. On the balance sheet, assets are typically shown in order of liquidity, from cash down to intangibles. Now let's see where those assets live. Open Accounting and click Chart of Accounts. Expand the section labeled Assets. Some setups call this Application of Funds. You will see a current assets group with ledgers such as cash and bank, accounts receivable or debtors, inventory or stock, and prepaid expenses. Below that, expand non-current or fixed assets to reveal sub-ledgers like computers, furniture, vehicles, or leasehold improvements. Notice how each parent shows a roll-up of its children. If you just posted the owner investment, the cash or bank ledger already reflects that balance. If the list is long, use the search bar at the top of the chart of accounts. Typing cash, debtors, or stock jumps straight to the ledger you need. When you highlight any ledger, ERPNext can show its recent activity and current balance. This makes it easy to verify that your entries are hitting the intended accounts. Liabilities are obligations, future sacrifices of resources, like accounts payable, wages payable, taxes payable, short-term loans, long-term debt, and unearned revenue. Cash received in advance for services or goods not yet delivered. They are grouped as current and long-term depending on when they are due. Let's record a small bank loan to see liabilities in action. Head back to Accounting and open Journal Entry. Create a new entry, set the posting date, and add a remark such as loan from bank. In the first row of the accounts table, pick your cash or the specific bank ledger and enter 3,000 in the debit column. The company received cash. In the second row, choose a liability ledger for the loan. Many companies use loans payable or short-term loan under liabilities. If you don't see an appropriate ledger, create one under liabilities, current liabilities, for a loan due within a year, or under long-term liabilities, for a multi-year note. Enter 3,000 in the credit column to capture the obligation. Confirm the entry shows no difference, then save and submit. Your cash increased by 3,000, and loans payable increased by 3,000. Assets up, liabilities up, still perfectly balanced. Owner's equity is the residual claim on assets after liabilities net assets. It grows through contributed capital. Owners invest and retained earnings. Profits kept. It decreases through losses and owner withdrawals or dividends. You can think of it as assets minus liabilities. Time to see everything side by side. Open Accounting, then Financial Reports, and choose Balance Sheet. Set the date to today or the end of your testing period and generate the report. On the left, Review Assets. You should see the cash balance reflecting the owner's investment and the loan proceeds. If you recorded any fixed assets, they appear under non-current assets. Then scan liabilities for the loans payable we just created, and then equity for owner's capital. At the bottom, verify that total assets equals the total of liabilities plus equity. If a number looks off, check the document statuses. Entries must be submitted, the posting dates. The report only pulls entries up to the date you selected, and the specific ledgers you chose. Expand and collapse the groups to drill into details and trace balances back to their journal entries. Let's wrap up. Assets equal liabilities plus owner's equity always. Assets are what the business owns. Liabilities are what it owes. Equity is the owner's remaining interest. The balance sheet shows this equation in action. ERPNext enforces double entry accounting so your records stay balanced. Keep practicing, create invoices, record payments and bills, and explore how each transaction updates your balance sheet and profit and loss. Thanks for watching.